Hey, everybody. How are you today? Welcome to the Biz Show. This is going to be a quick hit for you guys this week. Um, quick hits. This is our first quick hit of season four. And quick hits basically about a 5 to 7 minute mini podcast, if you will, on a particular topic. Today, we're going to discuss EBITDA. And that's been thrown around a lot. And actually, just recently, I've had probably about 5 conversations about EBITDA, and people don't know what it is. So specifically, new founders, new owners, startups, things like that, who are just getting into business. They don't really understand P&Ls, the financials, income statements, cash flow, and EBITDA. And what is EBITDA? So we're going to talk about that today. So first up, what is EBITDA? EBITDA is basically earnings before interest, tax, depreciation, and amortization. So what's that mean? And why do we care? Well, simply it's a measure that can gauge the operating performance of your company. So it strips out the financing, the taxes, the accounting decisions, and stuff like that. For business brokers and investor relations, for us, it gives us a glimpse of your business compared to other businesses without all of the minutia stuff that might be particular to your business or your industry only versus another one. Really, the formula is pretty simple, right? EBITDA is your net income, or it's in between your gross and your net income, right? Because it's interest, taxes, depreciation, and amortization. So why do we strip those out? Well, different companies have different debt structures. So some might have equity, some might have debt, some might have a couple different things, right? So we can strip some of those things out, right? Tax rates vary from county, from city, from state. So when we're comparing things, if we strip those out, taxes in California are going to be a lot higher than taxes in Arizona. So, and same over here on the East Coast, South Carolina versus Florida versus New York. So if we're comparing companies, we get rid of those, we can see a better picture of that company, the company's performance, so on and so forth. And then that can help us determine the valuation of the company. So those are things. Um, in the M&A and investing world, right? EBITDA multiples and stuff like that, we would look at like EBITDA equals $1 million or a multiple of 5x, whatever the case might be. That means that company would now be, if we're going to sell it or acquire it or merge it with another company, that company really could be worth maybe $5 million, right? At a 5x. So it really shows, right? EBITDA really shows operational strength and cash generation potential and scalability. So those are things that, as an investor or as a buyer who's looking to buy your company, or just general health for yourself as a business owner, you can gauge those things and you can make your own decisions on what um, you need to do to get your business on the track that you want it to be. Basically, it's just a gauge of how well your business is actually performing. So how EBITDA fits into your financials? Well, we kind of just discussed some of that, right? But it's a bridge between revenue and pure profit. And so from your income statements, you're going to get revenue, minus expenses equals your net income. EBITDA sits just above that on the net income and removes the financial decisions, tax strategies, and accounting adjustments. Again, so we can get a clear picture of the of your company and what it looks like. Um, it's not cash, right? We're not talking about cash or anything like that. Um, but it is operating cash flow because of major adjustments. Those will help owners and investors to understand the core business performance and get rid of all those external things that might be going on. So, what does EBITDA not tell us? Right. So it tells us a lot, but there's also some things we can't get from it. So, for instance, it's not a perfect formula, but it is a strong formula. Here's what it does not include. It does not include debt. So if you have debt payments that you're making on a loan or something else out there like that, that's not stripped out. It's still in there. Capital expenditures, those are still in there. Working capital needs and stuff like that, again, those are still in there too. So what's that mean? That means that a company can have a strong EBITDA, but still can be struggling with a little bit of cash flow. But it does kind of help us. Um, this is where a lot of founders get it wrong, and but we can see that and we can figure that out, and then we can take steps to mitigate that. Whether if you're a buyer or a investor, if you're a buyer, you might want to drop the price down or your offer down just a little bit. And if you're an investor, you might want to drill down with the founder a little bit more and get to the bottom of it and figure out strategies to fix it. Um, so here's some tips for you, right? Always know what your EBITDA. You hear me say this all the time, and Lisa too. What are what's your number? I say you need to know your number daily, right? You need to know it daily. You don't need to know it. I mean, you need to know it daily. Um, Knowing it weekly, quarterly, monthly, that's great. But if you know it daily, you can take small steps in order to correct it and head the right direction. If you just know it monthly, well, by the end of the month, it's too late to do anything about it, right? So that's something to think about. It helps you track your consistency with your company and then also understand how it changes over time. And that also changes your company over time, right? That's a couple things that you really should understand, right? So, well, anyway, as a quick hit, we just wanted to bring that up to you guys, let you know what it is, how it works, why you really kind of need to take a look at that, and then have a good day. That's a wrap for us, or for me today, just me. So, thank you for tuning in to the Biz Show. We appreciate it very much. We are looking for subscribers on YouTube specifically because we're new here. We're just starting out. We've got a great following on our audio Spotify, Pandora, iHeartRadio, Apple, Google, and all those likes on the audio side. But the video side, we're just now getting started. So, anyways, thank you guys. You guys have a great day. Go out and make some money. Talk to you later, guys. Bye.